Kalispera. Thank you everyone for kind of waiting for me. I do apologize that I'm standing between you and lunch, but hopefully the next 15 minutes you learn something about behavioral economics and how this might apply to insurance pricing. So we are going to do a very quick introduction to behavioral economics, then we talk about renewal pricing and behavioral economics, and then if we have time I'll tell you some personal story and you'll see how everything links together. So this is the definition from Wikipedia, and the basic notion is that we think about people, are people rational? Kind of, it's a very difficult kind of concept. We want to believe that everything that we do is rational and that we understand every action that we take, we understand the consequences. The study of behavioral economics is not necessarily challenging this, but just saying that people are people, and you need to understand that people sometimes behave in a slightly different way. And what we want to do is try to understand the way people think and try to incorporate it into the way we are thinking about our business and the way we interact with our customers. So I'll skip the Jeopardy, just give you Dan Ariely. Basically, this is kind of a guru of behavioral economics, actually a recent speaker in one of the Earnix summit. And he wrote all those books, and I highly recommend that if you haven't read those books, that you should go to the bookstore. I don't know what's the name of the local franchise of the bookstore here, or go to Amazon.com, and you can get those books. Really inspiring. Some of the common biases, I'm going to focus today on one of them, specifically the framing and anchoring, but think about one that is kind of, I like to talk. If you take 20 years old guys, and you ask them, what is the chance that 5 years from now you are going to be here with us? Then the answers you're going to get from the people are going to be probably surprising. The people will say, you know what, there is maybe 50% chance that I won't be here in 5 years. Now, clearly, if you look at all the statistics and stuff like that, 20 years old people, the chance that you'll see them 5 years later, on average, is very, very high. So why do people say that I don't think I'm going to be here? It's not because they think they're not going to be here. It's because they don't necessarily care. They are discounting the future. When they look at the future, it's not as important for them as living the present. So that is one of those, called hyperbolic discounting. But what is framing and anchoring? This is basically when people have a very difficult time, and I will demonstrate this, making decisions when they don't have a framework, when they don't have something to compare to. If you ask people just about something that they never heard of and try them to tell you how much they're going to pay and what they think about it, it's going to be very difficult for them, and this is where I'm going to focus. The last example I want to give is the law of small numbers. If you have a coin and you toast it, 5 times, and you says, I only got head 5, consecutive times. Now you're going to say, the next time I must get a tail. That's, if you're going to do a survey of people, you're going to get that more than 50% of the people will say that the next one will be, a tail. Why? It's because people don't understand that these events are independent. This is how people think. And all those biases are things that we should be aware of and things how they apply to our business. Now, let's start with some illusion. Does this have a laser? No. Okay. If you go and look at this and this, they look very different. When I put the background, kind of cover the background, now I hope you can see it all the way from the from the last row. Now you can see that the colors are basically the same. So it's all about kind of the framework that we have, and if we put it in the right context, sometimes we see things differently. I don't know how many of you are, recently there was this thing about the dress, that some people saw gold and white, and some people saw, I believe it was brown and blue, or black and blue. So this is, you can see, different people might have different perspective on things. So now, just as you see, I took away the kind of the white background, and then you can see again that, you know, these two are indeed different. Let's take the middle button. Yeah. Okay. Good. Okay. So let's take this example. You know, what explains differences in consent for organ donations? I'm sure this is a very hot topic these days. And when you look at the countries, you know, when they look at effective consent percentages, the percentage of people who are willing to donate basically their organs, God forbid, you know, something happens to them, you see differences, striking differences between countries like Austria, Belgium, France, and UK and Germany. You see, what are those differences? We cannot claim that the people in those two countries are very, very different. What is the reason behind it? Anyone can guess? What is the reason for the striking difference? These are same people. It's one simple thing. And it's all about how you phrase the question. Is it an explicit consent, I need to opt in? Or if I don't want to donate, I need to say no. People do not like to make any decisions. The easiest thing for people is just, let me sit still and don't make any decisions. So if you are asking people to, you know, actively say they want to donate their organs, it's a tough decision. You know, yes, we are very, you know, kind of concerned about the society, and we want to contribute, but why it have to be me? There's so many other people. If you tell them, if you do not want to do it, say no, okay, then, you know, okay, I just leave it. You know, so no decisions. Now, another example of mind framing, very quickly. What is your ideal vacation? You know, well, I have two. You know, of course, Athens is the best place to be in. But you know, if you have to leave, you know, Greece and you have to go somewhere, so some people would be debating between going to Paris or going to Rome. Now, it's very, very different vacations. So how would I decide between the two? Very difficult. What if I add something I call Rome minus? What would be Rome minus? Imagine is that all the benefits and the great things that you would get from being in Rome, except for one thing. You're not going to get your cappuccino in the morning with the croissant. Everything else is the same. And guess what? Rome minus and Rome cost about the same, maybe €2 difference. Clearly, but people say, well, we are getting extra cappuccino, you know, let's say in the morning and croissant and everything for the same price. Well, then now what we did, we are helping people to make a decision. Now people can frame their decision and say, it looks better, and you'll see people potentially preferring the Rome upon Paris, even though, you know, before it was very difficult for them to make the decision, and we'll illustrate this with another example. Now, this is the Colosseum. I don't know how many people here have been to Rome and have been there. I actually took my kids recently there. We had a lot of fun. And I want to talk about something about value framing and asymmetric information. How many people know what that is? Anyone knows? That's a selfie stick. If you go to the Colosseum or to any major attraction, tourist attraction, people are going to try to sell you this. And, you know, there's a lot of people who sell this, and they came to me and my family. They wanted us to buy this. I had no clue how much I should be paying for this. What do you think was the starting price that people asked us, you know, when they saw us the first time? Anyone can guess? Hey, let's hear some numbers. 400 euros. No, that's even... Yeah? 50, no, 50, it was lower. They started with 20 euros or so. So I said, 20 euros? I don't even know. What should I compare? How should I evaluate this? What is the true value of that? Well, I actually decided that's going to be kind of, I'm going to play some sort of a game and see how low I can go. And I try to negotiate. There's a lot of them. And when we negotiated and negotiated and negotiated, Eventually, the price I was able to pay is 3 euros. 3 euros. Now, I heard the clap, I like the clap, but they were smart. They also had the remote control. They were able to extract another 3 euros from me for that remote control. Now, after all that negotiations, we didn't know what happened. But listen, this is a selfie. You're going with a family. You're already there, and you're not really willing to pay 15 euros. Come on. Relative to the price of the trip and everything, it's nothing. Who wouldn't want to have those memorable pictures? Then I was thirsty. I wanted, this is as Coke Zero. I prefer the Coke Zero upon the Diet Coke. I don't know if you know the difference, but this is better. How much do you think I paid for the Coke Zero? 3.5 euros. Did I ask any question? Did I try to bargain? No. Why? Because I have already a mind frame around what Coke Zero costs when you go and you know that you are going to have to pay and you are thirsty and that's what you drink. So this mind framing made it easier for me to just accept. And what I afterward thought about, I said, these guys could have come to me and said, take the selfie stick, take the Coke Zero for 10 euros. It would cost them 1 euro for them to buy the Coke Zero. They would sell me the selfie stick for a 9, would make a nice profit. I never went back and offered this to them, but if you actually go to the Colosseum, you might be, I'm letting you use this, no, I'm not asking for any IP on that, so tell them to charge, because that would make my life much easier. Hey, 10 euros for this and this sounds like a good deal. They could even give me 2 of those bottles. Yeah. Just in terms of this mind framing that I told you about, those options, there is a famous study by The Economist that offered, you can see here there were 2 versions. They took 100 students or whatever number of people, and they presented them 2 versions. Version number A was, I'm offering you, you can subscribe to theeconomist.com for $59, just the web, or you have the printed edition for $125, or as a gift, you can get also the web for the same $125. Sounds like, okay, good. But the second group of students got only 2 options. You have the web, or you have print and web, and look, there is a price differential. Now, if you believe what I said before, and you already understand that for this group, it's very difficult. I really like the print. I like print. But should I pay $6 extra for that? Does this justify the cost? Now, what do you think happened when you look at the results and you surveyed people which one they would buy? Look what happened. When version A was presented, only 16 people chose the internet-only access. Why? Because they were thinking they are getting something for free, and it was very easy for them to make the decision. But when you took away that irrelevant option, suddenly the result completely changed. So sometimes, if you think about, in the sense of insurance, and people, it's very difficult for them to make decisions, you need to help them, frame the right question. What kind of information you want them to share with you, so make it easy for them, so they can relate to something that they know. I'll skip this just in the interest of time, and I want to kind of switch very quickly to insurance. So you see old couple and young couple, and think about renewal customers versus new customers. We think that, when we talk about renewal customers, they do not tend to shop. I think they're pretty sticky. Again, it's not in every country. You have to make there is difference between the UK, US, Greece, and, Italy, Spain, and we are operating in all different kinds around the globe. And clearly there is a wide degree of, type of customers. But these results that you see here, that elasticity or customer sensitivity, okay, let's put it this way, to changes in prices between renewal customers and new business customers is different. What is the exact magnitude? That can actually change, between around different countries. But you ask yourselves, do people who already have an insurance, contract with you, they don't care if you are going to raise the price by 10% the same way as someone who is trying to get a quote from another company or a new buyer? What? People don't care about their money? That's a question that people should ask themselves. Well, so it's all about the mind frame. Think about the renewal customer. What's in their mind? Okay? The renewal customers use as an anchor their existing price. They don't necessarily look what's out there. You already accepted the price last year and the year before, so this means you were comfortable, at least at some point, with the price that was offered to you. So that is your anchor point. The difference between the new offer and the old offer is influencing the decision of the customers, and that is the main component that will drive your decision. Different people will have different thresholds, and different people have different sensitivity. Once that threshold is crossed, potentially, okay, then what could happen is that, hold on a second, you want now 15% more? Well, 15% might be too much. Now, what happens to those people? They are now your new business customers that go to another company, and these people will be the shoppers. So it's not that people who are your renewal customers are not price sensitive or they don't care about expenses. It's that, they are happy with what they did and they have a mind, a framing, and to go and seek for another insurance contract, it's very expensive. Meaning the traditional economics explanation would be, come on, for let's say 15% of it, let's say it's 100 euros. So 100 euros for some people is a lot, for some it's not. I need to go and look for another insurance, I need to bring in additional documentation, I'm happy, and so on and so forth. There is another concept I want you to think about when it comes to renewal customers. While renewal customers, you might think that they all share, it's like there is no differentiation. Think about customers who have been with you for 10, 15 years. They might be more tolerable to the 10% rate increase. But from their perspective, they are not necessarily purchasing the same product. If you are with a company for 10 years and something happens, okay, you expect a certain level of service. Believe me, I'm a frequent traveler, okay, and my colleagues at Earnix, some of them are also, and, we are paying a lot of money. Our company pays a lot of money, and we are happy to do that. But, like what, when there is an issue, you want to be the first one on the plane if you need to get home. Okay? If there is no room on the plane, you want to be the one to get the seat. Same with the customers. They are not necessarily buying a commodity because there is an option called service that is attached to it, and that could explain, why people that are with higher tenure are actually less sensitive. Because there is some hidden agreement there that when the time comes, when the right time comes, you will step up as the insurance company and will serve them better. And for that, people are willing to pay a little bit more. Now, I'm just going to wrap with a quick personal story to illustrate how a company did not do that. I was paying about $800 for an insurance policy. That was the price. And, and I was contacted by my insurance company, and they wanted $900. Now, they came to me and tried to tell me that, actuarial costs and all those reasons and a lot of explanation. And I said, okay, guys, I'm older, I'm driving an older car, I'm a good driver. Why is my insurance rates are rising by more than 10%? That they cost kind of that my threshold was probably about $50. If it was $850, I probably wouldn't do anything. But they annoyed me. What I did, I went through the ranks of 4 different managers. 4. None of them, agreed to lower my price, even though I had also home insurance. I had another car with them. Nothing helped. So they crossed my threshold. What did I do? I went and looked for an alternative insurance, and I was able to find one for $750. I felt very good. Saved $150. Also, they basically gave me a 1-month credit. I didn't have to pay for the first month. They gave me money back. What happened, you think, the next year? What do you think happened the next year? The next year, of course, I got a call from my old insurance company saying, where have you been? We miss you so much. Why did you leave us? Come back home. I said, fine. What do you have to offer? Now, bidding game. How much they offered me for my new contract? 600. Can I get a lower number than 600? $450. Can you imagine? So what? $450, and to top that, they also gave me a $50 credit for a gas coupon. So I'm not saying that you have to give up when someone asks for a discount. I'm not saying that. But two things you have to take into consideration. When you think of calling your renewal customers, do you have any model? Do you have anything that will support the decision to contact certain people? If you contact certain people, what is the message that you are trying to deliver? So you have to be aware of that and, think about it. And also, you should have known that I was, someone who was willing to pay in the past $800. Why would you offer me a $450? If you offered it to me for $650, I would also come. All that is just to say that, again, I don't want to learn from anecdotes. I'm not a person of anecdotes. You need to look at the big statistics. But the anecdotes, what's good about them, they make you think. They make you think about how you interact with the customer, what data you need in order to support your decision. So to summarize, think about whether it's really good to contact your customers. If you do, think about it very, very well. If people, while renewal customers are less price sensitive, okay, switching, could be costly, but they expect a certain level of service, so you better give it to them. And when it comes to price, okay, make sure that you track all your interaction with the customers, everything that you do with them, so later you can bring the data, analyze it, and make sure that you are making the right decision. Thank you very much for listening. And again, sorry that I stopped you from lunch. Enjoy the rest of your day.